Hello, everyone. This is Harry. Just if I could get someone to raise their hand so I can see that you can hear me. Don't have too many people in the room. Is anyone listening? Can anyone hear me? Okay, thanks, Mike. We'll get started here. We don't have too many people in the room. I guess it's a beautiful day here in Port Aransas, Texas, and I'm sure it's probably everyone's got spring fever and they'll just listen to the recording tonight or something. Or it's probably me. They would rather listen to Larry than me. But let's go ahead and get going. First, we start out with the warning, and as we know, this is for educational purposes only. Don't risk any money you can't afford to lose. Today, we're going to talk about a few things. I'm really just going to go into the TradeStation desktop and just walk you through the different workspaces and try to focus on some of the software questions. So that's what we're going to talk about. But I wanted to talk about ether today, and hopefully everyone knows ether's a chemical that's kind of a liquid and a vapor, and it's used for anesthesia, and it's also used as a recreational drug by some people. And I found out about this was when I was a freshman in high school or in freshman in college. My parents sent me off to school, but they wouldn't let me take my pickup truck. They didn't want me going on some crazy road trip and getting all in all sorts of trouble. So when I was a freshman in college, I had to live in the dorm and I couldn't have a car and I couldn't have a job. So they really wanted me to focus. So I was having to get rides to up to college on the weekends when I'd go home. And so my parents would always get someone to take me. But the people they had take me up there were just totally college kids, dangerous, crazy. If they knew who they sent me with, they'd have let me take in my truck. So I had this one guy that he was a few years older than me, and he lived in the next town over, and he'd come get me. And he was a chemistry major. He was very smart, and so he was the vice president of the chemistry club, and he was very smart, but he knew how to make ether. So I guess in high school they were sniffing this ether and getting high off of it. So what happened was, yeah, I never sniffed it or whatever, but they had told me about it, and I figured they could figure out how to make it. And so what happens in sales and also in trading, I've noticed people get in the ether. And what I mean about that is in sales, you're always taught things like, while they're in the ether, go ahead and upsell them to the next thing. So if they came in and buy a car, and they're all giddy about buying this new car, well, that's the time to sell them the stereo or the upgraded leather seats or something like that. They're in the ether. They're in this high, this rush off of getting this new toy or this new course or something like that. So they're in the ether. And what happens is we do that as well when we're in a trade. So and I probably don't need to tell you all this because you're the more advanced students, and I appreciate all the time you spent to get to this level. But it happens in trading, and this is what I want to cover with the Cracking the Money Code students on Monday is, once you've had that really great winning trade, you want to kind of step back because you're in the ether. And we always do this. Oh God, let's find another one. And then you find something that's not quite set up or not quite really what you need to trade and you lose your money. And I know that happens because I can't tell you how many times it's happened to me. And so what I do is I just try to always step back uh, and think about what I'm going to do before I can take my next trade. Maybe even wait till the next day, wait for the markets to close, just calm down and remember that I'm in the ether. So, but most students are just really ready to pull that slot machine handle again, and I try to enforce this in there, when I tell them, look, this is not a slot machine. There's not a handle on the side of your monitor. Slow down. Let's wait for the next one to come. So just the in the ether. So let's go into next. Let's just go into the TradeStation desktop for swing trading. And if you have any questions, type them in. Also, if you can't hear me, log out and log back in. So let me see if we have any quick questions. Okay, great. Yeah, no. Okay, no questions. Okay, this is going to be a lot like, I know this isn't what Larry normally shows on the weekends in his webinars. He normally has his PowerPoints all set up with his screenshots on his PowerPoints. What I'm going to go a little bit different than Larry, and so I'm not going to cover a lot of the stuff he covers. I'm just going to really cover this. uh, desktop so that there's a recording of it, and so you can go back and watch it if you ever mess these things up or want to go through the step-by-step process. And this is normally what I'll do when I set you up with your course pack on our one-on-ones. So we have this desktop, and just chime in with any questions you might have. And I'm going to just show you a few of the tweaks that I've done to mine. And I know that there's some people in here that have taken other courses and want to incorporate those indicators into this desktop. I tend to use the swing trading and the trend trading desktops for my analysis. Trend trading doesn't really cover premium and some of those things, that we've covered in cracking the money code and swing trading. So I don't have one desktop that has everything in it. I just switch between the two. And the way I can switch between the two is I set the symbols as global, green global, so that if I change from corn to something else, it'll change it on the other desktop as well because that one's set up as global. What, what we've done here, and this is what I like to tell students to do, is now that you've taken cracking the money code where we used the 156 look back, the 3-year look back, the 156 week look back, go and compare that to now we're speeding it up with a 26, a 6-month, and look at the difference. So what I'll do is I'll go in, let's just do that here real quick. And let's see what kind of difference it makes between cracking the money code and swing trading. So we'll go up here. Oh, let me see, where are they? I got so many because I had to test them. Those. Well, we'll just use one of these. Hopefully it'll work. Okay, let's just look at the commercial index, and we'll put it in its own panel. And we'll make, instead of 26, we'll make it 156, what we had in cracking the money code. So you can see it's very similar. This one's a little bit faster up at the top, but it's still similar. And what I want you to remember is Larry said his friend Bill Meehan was telling him, hey, look, Williams, you don't need this on a 5-minute chart because it doesn't matter if this data comes out once a week or once a month. It's early. So both of these are going to be a little bit early. It's just that the 6-month is going to be a little bit more reactive. So I always like to ask the students to go and look at that and do the comparison and see what the changes are from cracking the money code to swing trading. Swing trading is great because now this is a little bit shorter term. We're going to speed it up a little, and it's going to really jive with what Larry teaches and talks about in Larry TV. So that's why Larry asked you to kind of hold off on Larry TV until you've completed cracking the money code and gotten to this level. Now, Larry and Louise like to recommend people to wait to take Larry TV until the end, so it kind of extends the 6 months of webinar to even 3 more, so you get a little bit more with them. It's up to you. It's a low-cost product, and it's really good, and it really goes well with this and the Art of Short-Term Trading seminars because it's that shorter-term stuff, which is good in a sense because the shorter term stuff is a little bit more accurate. You're not going to be pulling out as much money on these trends, but your accuracy is going to go up. So it's kind of nice to trade at this level. So I'm going to go ahead and remove that. So what we have here are our 3 conditional setups as we always have: the commercials, the sentiment, the newsletter writers, and the large speculators. Now, you can also put on here the small speculators, but that's just one more thing, or Wilco, or some of these other indicators. And at this point, you're probably you could apply those here as well. So that's one of the things you might want to think about, is applying some of your other weekly indicators here. I've had a student ask me about looking at, what was it? What was he looking at? One of these indicators that I think it was sentiment on a daily basis. Well, we're really using it on a weekly, and I even talked to Larry and Louise about this, and it's like, that's just a setup. It's not something you're really going to make an entry decision on based on sentiment. Now, the one thing I like to always tell people is, or the students, is you can kind of see here and this is something Larry just told me one day out of the blue. I just happened to be on a Skype meeting or something with him talking about something totally different. We were just talking about the market. And we- see how this green line, over here we have the setup. But when the green line comes like here, where it comes down and catches, here was the setup. See here, we had the large traders up here, the sentiment up here, and the commercials down here. We were in in the end zones. But when the sentiment catches up with the commercials or jumps on the bandwagon, is the way I see it, then that's kind of when that move takes off. So I want you to watch for this green sentiment line on a weekly basis to see how it comes up in comparison. So here was the setup back here, but here is actually when the move took off. So keep an eye on that. That's kind of a cool thing that I don't think I've ever seen him teach that. Maybe some of you have, because some of y'all have been to more stuff than probably I have. The next one, we're going to look at will val and the net position, just as we did in cracking the money code. But what we want to do is we're going to have to change the benchmark symbol. So what normally students will do is come in here and put in gold, the bonds, and the dollar index in this one panel, so they're all here. So if we were to change this chart to gold, this line would go away. So I'll show you that first. Most of you probably know that, but let's change the symbol to gold, GC, and you can see this bottom panel goes away. And normally the new swing trading students are saying, hey, I don't have will val. Well, it's because they're comparing it against gold, gold against gold, if you look at the benchmark symbol down here. So what we have to do is we have to change that either to the bonds or the dollar, and what you'll do is you'll go up here and format this benchmark to like US or DX right in here. But what the students are doing now, and this is what I recommend, is go in here and add them, let's see, 2 more times. So I'm going to add will val. I'm going to prompt for formatting so that I can put it in the right panel. But first I'm going to change this one to the bond, so that one's US. I'll go to scaling and I'll make it subgraph 3 because this is 1, 2, 3. And now it's there. We have the gold there and the bonds there, but you just can't see the gold indicator because it's comparing gold against gold. So now let's go add the dollar. Again, we'll go insert analysis technique, add the will val one more time, and we'll change the benchmark symbol under inputs to the DX. And OK. Oh, I forgot to put it in the right panel. So let me go move it. Make that 3. So that's your subgraph there. Okay, so let's make this corn again. So now all 3 of them are there. And you probably can go in here and change the colors and things like that. And they tend to move together as well, if you notice. But this will save you a little time from when you're going through your list of having to change that benchmark symbol. So that's just a little FYI. Let me see if we have any questions. I think we have a question here. Yes, the small specs or the small trader is from the COT report. Yes, correct, and it's an index like the large traders or the commercials, and you would have the look back. So if you were using it in cracking the money code, you would use the 3-year look back because we're trading a little bit longer term trades in cracking the money code, and now in swing trading we're speeding it up, shortening the time frames. So you would want to change also the small traders down to a 26-week look back. But go ahead and check that out. You can use it. It's just one more thing, and when really when I'm seeing these things set up, I understand. It's just it's just one more thing on my chart. The next one is the seasonal trend, and the seasonal trend again let's talk about that. This is the 26-week look back on the commercial index, the red. The green one, you never change the settings on the sentiment. And we'll go over the different changes we'll make in the desktop here. So again, we have the 50-day moving average here, or it's the 50-day, which is also the 10-bar moving average on a weekly. You could come in here and put in a different one for like the 18, which we're going to speed things up, and we'll talk about more on the percent R chart. But it's just the moving average is all it's telling me is the direction of the trend. It's just a trend tool. So don't read too much into it. I just like to put it on there so you can see it. And again, um, we want to the one thing you want to make sure you do is if you're going to take this seasonal index to a different time frame. This one you can use on a different time frame. You want to be able to put enough space to the right of price so that it'll plot. So let's just say I want to take this to a daily. If I go to a daily, I'm going to get an error message. It's going to pop up a error message. See, right off the bat. It talks about bars to the right. And what it did was it actually changed it to a daily chart. It the it turned the status off on the seasonal index and left the chart the way it was. So with this tool in cycle forecast, you have to make sure you have enough space to the right. So we'll go format the window. So it was 52 for a weekly. I used 266 for a daily. So now we're out here in time, and this kind of freaks people out because they're like, oh my God, where did my price go? Well, it's back in time. If we look where we're at, we're in next December. So you got to scroll back in time, and there it is. Well, now we have it, but the seasonal got turned off. So what we have to do is right-click on the chart, go to Format Analysis Techniques, and then find the true seasonal and turn the status back on by selecting the status button and hitting close. And now we have it. So our issue was making sure there was enough space out here to plot this indicator. We had a new student wanting us to put this in Metastock, and the reason Larry couldn't go with Metastock is because Metastock cannot plot to the right of price. So his cycle forecast and his seasonal and anything maybe in the future he comes up with it plots to the right. Uh, we couldn't do it in Metastock. So Larry's looked at a lot of software, and we're still working on eSignal, and there was a big hurdle this last week that Larry and his programmer got over. Actually, they had to hire another programmer to come in and look for the problem. So just be patient with that, because I'm hoping that's going to be a really great tool because it has a lot of different markets you can trade. So some of our students in India and some of those places that want to trade those markets, you'll have the opportunity to use Larry's tools with those markets. So I'm kind of excited about that, and I hope it happens soon. But let me go and change this back to the appropriate settings. 52. Okay. Oh, yeah, sorry. Let me move it to weekly. And now I have to go turn the status back on. And this is a chart I really like looking for that situation that we talked about a little bit earlier with the sentiment, where it catches up, it's jumping on the bandwagon. If you can see that here, look, we're in a valley. They jumped on the bandwagon, and look where it went. So really, that's one of those. It's almost like an entry tool, if you ask me, but it's really a setup tool. But think about that. That's really a key. So I see it happening here, and we're in a little bit of a valley, and this thing should rally. So I'm getting interested a little bit. It's just a little bit. It's just kind of, let's keep an eye on, see what happens here with corn. But let's go on. The premiums are the same. We would look for premiums. We have the newspaper view, which you can get off that KIS application. I don't really use it that much at all, really. Either, well, I'll use the KIS if I'm on the road and I'm just looking at the markets to see what they're going and see if something is on premium. But for the most part, I'm going to really look at the spread chart because the spread chart's going to give me that early warning. Because what we're looking for is the relationship between the two contracts, this month and then, or the front month and the next month out, or maybe in the energies 2 months out. We might, or so that's the relationship. And just because the front month is not more expensive than the next month out, that's not what I'm looking for. I'm looking for the relationship of the front month to the next month out. Is the front month getting more expensive relative to the next month out? So let's look at that, and I guess we'll look at wheat. That's a quick one. So let me find back in time. We'll go back here in time. You can see here where the spread line is turning up when price bottoms out. So this is not above 1.0. 1.0 is here at this level right in here. Well, right, I think it's right here. It's about right there. But see, it's turning up ahead of time. So this is telling me that the front month is getting more expensive relative to the next month out. So this is an early warning. If we were just to watch the newspaper, well, we would probably not really recognize it as being in a premium until it is 1.0 or the front month is greater than. So, but I'm sure some of you have really good minds and can just look at price numbers like that and you know, you probably make a good tape reader. You can just look at numbers and see the relationships changing. Well, I'm a little bit more slow. I'm from Texas, South Texas, so we talk slow and think slow. I need to see this red line turning up, okay? So it's telling me it might be down here at 9.8 and turning up, and I'm like, aha, something's happening. So think about that and when you're looking at premium, because that's going to really give you a heads up. And the premiums are only for the natural resource markets, if you remember. We're not going to look for those in the mini S&P or bonds, the currencies, or any future man-made markets that may come up. We're only going to look at natural resource markets. So with this desktop, I've only put in the markets that I made an individual tab for the markets that are natural resource markets. And the reason, you'll see that they're not linked, and that's because I didn't want you to change this to, you know, if they were linked, it would change this top symbol, but it wouldn't change the comparison symbol. Ooh, this one needs changing. Let's go ahead and fix it while we're here. And so I didn't want the students to get confused, but that spread, and I used to ignore spread because I didn't understand it. And I didn't go through cracking the money code. I went to Larry's very most expensive seminar first, and we didn't and we covered spread, but we didn't go into detail like he does in cracking the money code. So I was using the spread on the mini S&P and bonds and all this stuff, and it just didn't seem to be working. So uh, I just ignored it, and it was kind of a hassle to keep up with. Well, once I started using premium, I really, it was like, oh, wow, this is great because now I'm getting a little heads up. I'm getting confirmation now on a daily basis, a daily setup, and it just really changed the way you know, my profits. So to change this comparison symbol, you can see here we still have it against September's 14, September week, and you can also notice that here it doesn't fill out all the way to the end. It stops because that's when that contract stops. So what we need to do is go over here, format the symbol, and that one's data 2. So highlight data 2, format it, and we'll change it. So we'll change it to the July 15. So if you don't know your symbols by now, which hopefully you do, you can always go back to the premium, the D1, the newspaper view, and use a tooltip and highlight over the different ones and learn your months. We'll hit OK here and then close. So now it's fixed. So now it looks, when it's jagged and moving around, I know it's okay. When it's flatlined or looks funny, that's when I know I need to update it. visually and look here, and I also look for this price. But I squeeze that up. We really don't need it because what we're looking for is the relationship between price and this red line. We're not really looking at the price action of this next month out. So that's why we squeeze it up. Let me see if we have any questions. Hi, Diane. The rules are we're looking for price to bottom out. We're looking for premium to come in the market, and we're looking for a bullish 3 to 15-day move. That's all Larry says in the Cracking the Money Code. So go back and focus on Cracking the Money Code and see what he says. Don't and that's one of the things that I try to instill in the students in the in the beginning is really don't read more into what Larry's teaching you than what he's teaching you. And that's so important because no, there's nothing bearish about premium at all. Remember, the commercials want that it's in demand right now, right? They need it. Like last year when the oats were going crazy because of all the snow and they couldn't get them out of Canada, there was plenty of oats in the bin, but they were having transportation problems. And Kellogg's and people that may use oats really needed it, so that it really pushed up that front month's contract. Where the July contract, that thing in comparison was really weak because by July, hopefully all this, well, we'll say, hopefully most of the snow's gone in Canada, and and you know the trains can get moving. But the trains were competing against oil, and because Obama had to, say no to that pipeline and fight that tooth and nail. So now the oil has to get out of Canada on rail cars. So there's a competition to get in those rail cars between oats and oil, and and it made it worse with the bad weather. So you, we don't see anything bearish with premium. So if in the first three, like I tell people in Cracking the Money Code, if in the first three tabs you're bullish a natural resource market, you can then go look at these tabs here. But if you're bearish in natural resource market, you just go this fast forward button and skip over all of these and go on to the next setup, conditional setup. Or if it's not a natural resource market, you could just skip premium altogether. So it's only when you're bullish, you're conditionally set up for a bullish natural resource market do you go look in premium. And then you're only looking for a 3 to 15-day move because after a certain amount of time, this still may be above 1.0, but price is coming down. So we're not reading anything bearish into this. We're just saying if after 3 to 15 day we get a move, that's all we're getting. So don't read anything more into this than what Larry teaches. Okay, so let's go on. So the next, oh, you're welcome, Mike. The next one we'll look at is Progo and then Progo Public. So we want to make sure we have these with the right settings. So Progo Public is 10. So make sure if for some reason you don't have this on 10, it might be 14 because the programmer, when he built that indicator, defaulted it to the same as the professional. Make sure you change that to a 10. Now, as we can use Progo Professional, as we did with Cracking the Money Code, we're either looking for the divergence or convergence against price, or we can use it more of a mechanical trading system against Progo Public. So sometimes it gets choppy, but it gives you buy and sells when they cross. So that's really how that's kind of used. Uh, Larry may use it other ways, and you might ask him that. But for me, that's what I'm looking for. So if right here, this week we recently had a cross above with the green, so that was bullish, and a cross below is bearish. Now, like I said, like any system like this, it can get choppy at times. The next one, again, would be open interest in net position. This is straight out of Cracking the Money Code. We're really not changing anything. The reason this workspace is here is because we were building upon what Larry taught in Cracking the Money Code, and now we're changing the settings and adding more indicators. So I had a student this last week tell me, "Oh, I was watching Larry TV, and it doesn't have anything, it's against what he teaches in Cracking the Money Code." And I looked at it and I was like, it's exactly what he teaches in Cracking the Money Code. But the reason is because the student was seeing that the commercials were above the 75-80 area, and the large traders and the newsletter writers were below the 25, and Larry was giving a bullish or a bearish um, trade. And I didn't watch Larry TV, and I never do, so I don't know exactly what the trade was. But if we look at the Japanese yen, let's just look at the Japanese yen. To me, that's a downtrending market. Why would I want to buy this thing? And the conditional setups for this were way back in 2012 for this short that he was exploiting. So, of course, the commercials are above 75-80 area, but we know that the commercials are early, weeks to months early. So, early on, I'm willing to take trades against the commercials because I know they're early. So that's just one thing I want you to think about. The other thing the student was having trouble with was seeing open interest, the open interest setup. And so if we look for it, let's just see, we could probably see one right here. Well, this isn't the greatest, but let me go to a different market. It'll happen pretty regularly. Well, we might see it here. Price coming down, going sideways, open interest came in the market. It came out. So right here, you can say that's it. It's not the greatest looking one. I'm sure we can see it on corn or something else. Go back to this one. Here it is. Price coming down, consolidating and going sideways. Open interest coming into the market. We expect price to continue to go down. Open interest coming up, going sideways. Let me put a pin on this. That might make it easier for you to see. Price coming down, going sideways, open interest coming into the market. We expect price to continue to go down. We see price coming up, consolidating and going sideways. We see open interest come out of the market. We expect price to go up. This is one of the easiest things I think I can spot and see out of all Larry's stuff. I think Progo gave me kind of a little bit divergence and convergence was a little bit hard for me to see in the beginning, and it was one that, again, that was one I tended to ignore because I had a hard time seeing it. But and this student wanted to use a different setup tool instead of open interest. Instead of trying to learn open interest, they were just ready to scrap open interest. I'm like, don't scrap open interest. This is such an important tool. So, and as you know, Larry's going to start teaching more and more how he uses it with the net position and things like that. So that's why I like to have net position on here, so you start getting to see how it works in conjunction with open interest. And we'll let Larry talk about that more when he does his version of this seminar. The next one's a pinch in the paunch. I used to live in Colorado, and I lived in the national forest. And there was all these mountain lions and bears and bobcats and deer. And I lived right next to a mountain stream where all the deer would come and drink and get water. So there was always all these deers around there. Well, that meant there was mountain lions. So, and then there was the dumpster. That meant there was bears. So the bears would come down to the dumpster and try to get in it. The mountain lions would come down and eat it. And a mountain lion eats a deer once a week. So there was always these deer parts and things all around. So it was kind of creepy being from the city, living out there. But it was nice. But I would always see these bears, and I would think, if I could just reach over and pinch that bear. So with the pinch in the paunch, the way I remember is pinch a bear. So, and paunchable, I don't know what paunch means, but pinch a bear. So this is where we're going to look for this pinch and paunch. when when it gets over 40 and when it gets to 60 and things like that that Larry's talking about. But this is basically just an ADX. You can use a 7 or an 8 and a slow stochastics. Nothing to it. Now I know Larry has some special one that he had made for himself. Um, that's just one line, but you really don't need it. And you can use these two tools here, and they're perfectly work just great because you can see it pinching and punching. So remember, pinch a bear. So if it's pinching, you're bearish. If it's punching, you're bullish. And hopefully everyone can see that. The next one is the percent R. Now the percent R, I consider this one as both a setup tool and an entry tool. And this one, I want you to do, this is what I want you to do. If you don't have the 18 bar moving average, put it on there. I left the 50 that we used in the cracking the money code here, just so you can see that. But the 18 is a little bit faster, and this is a faster course, so we're changing this up to a 4% R. And this is going to be the same percent R he uses uh, in his Art of Short-Term Trading course. And what I like to do actually is put the 4, the 10, and the 14 all on the same pane, or all on the same page, so you can see them. Because you'll hear Larry say things like he uses a short-term entry for a long-term trade, and people are like, "What does that mean? What's a short-term entry?" Well, let's we'll talk about first. Well, we'll talk about that. Just give me a minute. We'll talk about that. We want because he uses percent R both as an entry tool and a setup tool. So as we know, the setup tool is it in the sell zone, which is up here, or in the buy zone, which is down at the bottom, right? That's the setup. The entry is you buy or sell at the low, the high or the low of the day before. So let's kind of talk about that and erase this. So in cracking the money code, remember it's under the 50 or above the 50. Or here since we're speeding this up, we could use the 18 instead. And the 4 again is half of a week, kind of. Really, you couldn't make a 3.5% R, so we're putting in a 4. 10, and that's his favorite short-term setting. 10 is about half of the number of trading days in a month, and 28 is about half of, or 14 is about half of, is 28 is half of 28, which is a lunar cycle, or about a half a month. So we're speeding this up, and you'll notice if you put a percent R14 against this, it'll be a little bit more roly-poly, where this one has got a higher frequency. See, it's up and down, up and down, up and down, up and down, up and down. So the one thing I've kind of tried to do is compare them to each other. So because I can really, it's easier for me to see a 14 than it is for me to see a 4. Right? It just sticks out more. So let's go over here and we'll just add that just so you can see the difference. That's kind of really what I want you to understand is the difference. Again, it would be something like I would do with the COT index. I would kind of look at the difference between the 156 and the 14. Sorry, I have a bunch. So you can see here's the 14. It's slower. It doesn't go up and down as much. Look in here. The 4 is really going up and down here, where this isn't really getting over into the other zone. It's going up and down, but it's not going to the extremes like the 4 would. So over here, you have a really strong percent R setup, and they're both jiving. So I kind of like seeing when they both jive, because then I really think it's a good one. But you'll see that this has more frequencies, and so you're taking shorter term trades. And then the 10 is kind of in between. It's probably closer to the 14. But we're taking half of a cycle, whatever cycle you're looking at. So if you want to trade, I had a guy who want to trade 266 tick bars. And so that's when I was like, Larry, what do I tell this guy? He was in trend trading and he's trading 266 tick bars. So the guy, he's a real nice guy and he lived near me and I'd go over to his house and help him out. But he was just, I don't know why he was stuck on that. But what you want to do is take the number of bars you want to look at or the cycle you're looking at and divide it in half. So, for example, you may want to count cycles in here yourself, or maybe you have a cycle tool or something, and you decide how many bars you want to look at. So let's say you found that around this thing cycles, gold cycles, for example, this was an example. I don't know if it's still doing it, but maybe every 18 days. It goes up and down, up and down, up and down, up and down on average. So you go through and you look at all these cycles and you're counting up the days. It might be 25 and then it might be 15 and then it might be 21 days and then it might be 12 or something like that. And then you get this average of 18 days. So then you say, okay, I'm going to take that 18-day cycle and divide it in half. And that's what I'm going to use for my setting on percent %R. Or, so you just have to think about it. And say you want to trade 60-minute bars. Not that Larry teaches that. You have to say, well, how am I going to set my percent %R? Am I going to set it at 12, which is half of 24 hours? Am I going to count up the number of trading days or trading hours in the day? Or am I going to count up my cycles over a week and figure out what's a good number to use? That's really what you want to think, because these courses are meant for you to start thinking like Larry. That's kind of different than Larry TV. Larry TV is more of a commentary that took over his daily comments or recommendations. He wanted to bring it down to more of a weekly thing so that he wasn't having to write that newsletter every day. So this is what you want to think about is the settings and why he's using them. So hopefully that helps. But go in here and what I'll do is I'll use a 14, a 10, and a 4, and I'll put them all in here so I can look at them all against each other, and I'll change the colors. And then like that one where you're using the 9 versus, the 9's so close to the 10 that it's really, you could probably use a 10 and get away with it. So that's why the 4, the 10, and the 14 work really well, because they're really close to the other numbers you're probably going to come up with. Unless you're trading something like on a 5-minute chart or something, I don't know what number you would use. So it just kind of cracks me up because sometimes I'll get on with students and I'll look at their charts and they'll have like 40 tabs of the same thing, and they'll have the commercial index on a 5-minute chart and the percent R14 on a 5-minute chart, and I was like, well, what does that mean? First off, the commercial index isn't going to change until next Friday. It's just going to be a straight line all week, and on a 5-minute chart. And the what does that mean for the 14 on a 5-minute chart? I don't know. Have you thought about this? So really, just kind of think about these settings, and I'll tell you which ones that he's going to change, or you have the ability to change. So the percent %R is not only a setup tool, but it's also an entry tool. So when it's in an extreme, say this peak here, you would sell at the low of the day before, which would have been over here, which you probably wouldn't have entered until somewhere over here. It had a little bit of a move, pulled back against you. I don't know where you might put your stop, but that's really the entry tool. So when it's above, then you want to buy at the high of the day before when we're at a low spot. So here, up here, so over here would have been our buy. So it's just an entry tool and a setup tool, so it's kind of a combination. Let's see, I don't think we have any questions yet. Okay, good. The next are more triggers, and again we have the Wilder's volatility, the turtle channel. Turtle channel you can use as a 12 or an 8. And again, we're building upon what we learned in cracking the money code. So maybe with this, you might want to change it to an 8 instead of a 12. So it's a little bit tighter. But we've got the smash days, which are very similar to the fake outs and the naked closes. So those are over here. Let me see. Those are just more entry tools. Here's the smash day buys and sells, so they're there. You trade those just like you would a fake out. And then our naked closes. So when it closes outside of the range of the day before, that's a naked close. So we would buy at the high of the day before if it's green, or sell at the low of the day before if it's red. Now, they don't always happen. So, I mean, they don't always, this isn't something I would just use as a trading system solely by itself. These are just ways to get in a setup market that you've had set up. And think, different things like premium or progo and things have been telling you now on a daily basis, hey, this is set up. So I think of these tools, entry tools, and there's ones that you can't, that don't have indicators, like the qualified trend line. That one doesn't have an indicator. I mean, that's not going to plot. Or the specialist trap. So let's look at a specialist trap real quick, because that's one. Um, I know we had one in wheat that's real clear for you to see. And it really was setting up with everything else. So it was really nice to see that specialist trap as extra confirmation. So if we look here, we had price moving sideways, coming down and moving sideways. We had premium coming into the market at this time. We had Progo showing us convergence. So, and we had been set up for months. So we see this specialist trap here. We see it going sideways. So the rule is to buy at the high of the day before. So this big bar down closed outside of the sideways range. So we would buy here at the high of the day before, which would have entered over here on this big bar up. And if we use this short-term low as our stop, we'd have never gotten stopped out, and we could have just kept raising that stop. So there's a specialist trap. That's something that you probably, well, I don't, maybe someone could figure out how to program it so where it highlights it, but it's not going to highlight it until after the fact. So it's just one of those things that and things like that is why this can't be made mechanical. It's because, how do you tell it this is sideways? So it's about telling computers what to do. So those are those. So let's go back to the triggers. So these are reasons to get in the market. Again, the last two tabs of the desktop are going to be the same as cracking the money code. The only thing we're going to add is will stop, which is this orange line. The other two are from cracking the money code, 90% of the range of the last 3 days. We also look at short-term highs and lows. We have another one, our money stop, or our will stop. It's just another stop you could use as a cross kind of thing. And it's just one more. But the most important stop to think about first off is your money stop, because you can't use any of these other stops until you know your money stop. So your money stop might be way outside of this, which is fine. Then you can use any of these. But if it's not, if it's smaller than that, then you either have to take one like this 90% of the range that's a little bit closer, or if you're shorting here, or something else, maybe the high of the day before if you have a big bar down, some other stop place that fits your money management techniques. And I'll just use the dollar difference tool here, which you're probably all used to using by now. And then the last one is basically we're going to use our target shooter, or we're going to find our profit target. You could use tomorrow's high and low is probably a nice one, or the target shooter here. So these two tabs, the only really change in it was adding the will stop, because you get one more stop with this course to work with. So we're not going to give up on the ones we learned in cracking the money code. We're just going to add to them. So this, same thing with trend trading. We're just adding more complexity. We're getting a little bit more deeper into it. And then with that course, he's going to talk about his synthetic indexes and stuff like that as well. But really, you don't need that. I mean, people will be just fine with what we've got here. And even cracking the money code, it's fine. It's just you have to wait for trades a little bit longer with cracking the money code. Where here we're going to get more trades, but we're going to, really going to have to get in and out of them sooner, and really not hang on. And we're going to try to look for a little bit higher accuracy, but maybe less of a trend. But let's go back to what I was talking about with percent R, because then we'll wrap it up and see if you have any questions. Let's look at what's this, wheat. Let's see what we got going down here at the other end. Okay, so the top one is the 4, which is faster, than the bottom. So he may use a %R4 entry when it sets up. But when these %Rs get to the other extreme, so let's say we were going to buy here for some reason, so we buy at the high of the day before. So he's going to wait for %R14 to get up into the other extreme before he actually exits. So what he means by that, he's using the short-term %R4 entry for a longer-term trade when he's going to exit on a 14. So that's something that confuses the students, and I get that question a lot after a while. They're like, he's going to use a short-term entry on a long-term trade. Well, yeah, that's what he's using. He's using some kind of short-term, like a %R4 to get in this thing, but he wants to ride the trend a little bit longer, so he's going to wait for the 14 to get over there. So it's going to take longer. That's a big question I have. Let's see, do we have any more questions? I don't see that we have any more questions. The one thing I try to ask students to do is to, when you get out of your desktops, say no to all. Save it as it originally is, unless you've added stuff to it. And if you're going to make your own thing, maybe you've gone to see Tom DeMark or Jake Bernstein or some other, Tom Bollinger or some other educator, and you want to make your own thing and add their stuff to it, what I say is just, instead of trying to mess this thing up or adding to this, just make a new workspace. New workspace here at the end. And then you can go and copy a chart that you like. Let's take that %R one. You can go over here and copy the window and then paste it. Paste window. That way the background colors and everything are the same, and you can go in here and add whatever you want or mess around with it. And then just name the workspace something different. Because if you start reusing the same workspaces, the thing gets confused and it's just kind of a hassle. Also, I recommend if you're still struggling with TradeStation, go to spend some time with Antonio in their training department. And if you email customer service or client services at tradestation.com, you can set up an appointment with him. It normally lasts about an hour. He says he's backed up about 3 or 4 days, so it might take 3 or 4 days before you get your session. But that's a good resource to ask a lot of these questions. Like I got a question the other day about what was the symbol for the continuous lumber. And I think it's, there's several symbols with lumber. I never trade lumber, so I honestly didn't know. But I do know that there's a special symbol for the continuous lumber. One of the students brought it up in this past seminar in St. Croix, but I don't remember what it is, and maybe Larry knows what it is, but he's in Japan now or someplace, and I didn't really want to bother him with that, so I basically asked the student to go find out from TradeStation, and I still don't, I think they gave him a pit symbol I think it was at lb.p, which meant it was a pit symbol. So there's a lot of things like that I don't know about TradeStation. I really haven't ever executed a trade on TradeStation, so things like that I don't know. They handle their first notice day. If you're still in a trade on first notice day, they're going to kick you out in TradeStation. They're not going to let you take delivery, which is different from other brokers. So there's a lot of things I ask you to contact your broker to find out about, because there's things I just can't teach you. And in the old days, the brokers used to teach everybody trading, and they teach them how to do everything. And they've kind of gotten away with that, gotten away from that once everyone's gone electronic. But you're paying them money, and they really do enjoy helping you get up to speed. And I'll learn things that I was told different by one of the educators, and I talked to the broker, and then he said, no, we handle it this way. So each broker's different. They have their own rules. So you want to just make sure you're in with talking to them and finding out what the rules are and things like that, and what their symbols are, and how they handle things. It's a great resource. So don't give up on your broker. With that, I don't think we have any more questions. Let me put up my contact information. Most of you probably already have it. Oops. Let's see. Yeah, that's how you get a hold of me. I took the Skype off because I upgraded or well, I got a computer with Windows 8, and somehow it got taken off, and I still can't figure out how to get it back on there. It was kind of built in with the software, so it's best just to shoot me an email or give me a call or send me a text if you want. It's whatever. I'll answer it. With that, everyone have a great weekend, and thank you, Diane. Uh, Let me know if there's anything you need, and I hope to talk to you soon. And I really enjoyed spending this time with more advanced students and who've been around the block a little bit. Um, you can add the Skype program in the Windows Marketplace. Oh, well, it was already loaded. The Skype was already loaded, and then it stopped working, and I don't know what to do because it's on my machine. I can't figure out how to take it off. Uh, yes, you can compare relative strength between currencies. Definitely. All the groups and complexes, you definitely want to do your comparative strength, both from month to month and from market to market. So definitely. Okay. All right. Well, I guess that's it and all the questions. Just shoot me an email if you have any more, and hopefully this was helpful and a little bit of change from what Larry teaches. I know you'd rather probably hear from him, but poor guy, he's just had kind of the worst trip I've ever heard anyone ever have on a flying. So he had to ride coach from Chicago to China, and I'm sure he wasn't happy. So I hate to laugh at Larry, but I was like, oh man, that's awful. Not Larry. Um, but I'll let you go and have a great weekend and talk to y'all soon.